Hello, and welcome to Start Strong. My name is Nancy Tyree. I'm the Agency Initiatives Manager with the Indiana Department of Revenue, and I will be guiding you through our presentation today, which is the first in a two-part workshop on small business taxes in Indiana. I know that most Indiana business owners set up shop because of a passion for their industry, their customers, their service that they provide. Usually they don't have a passion for paying taxes. We are here to help make sure that regardless of how passionate you are about your taxes, you have the knowledge needed to handle them correctly. So let's get started. Everything that I'm going to be talking about with you today is accurate and up to date to the best of our ability. Our goal is to provide general information, and sometimes information does change between when you watch this presentation and when you'll be putting it into practice. So later on, I'm going to talk to you about the best ways to find information and stay up to date in case that happens. If you're watching this, I assume that means you are interested in owning your own small business, or maybe you have already started one. If so, congratulations. Small businesses in Indiana are a huge part of our state's economy and are responsible for a lot of the tax revenue that we generate. So it's very important that you understand your role in that process. Along with this presentation, I also recommend you check out the Indiana Tax Handbook for New and Small Business Owners. It gives more information about the topics we'll be covering today, which includes information about the Indiana Department of Revenue, business structures, how to register a new business, an overview of some of the most common tax types you'll have to deal with, how to file and pay those taxes, and then we'll close it out with a few business resources. Business owners interact with a lot of different state and federal agencies, as well as non-government organizations, and it is easy to get confused about what all of those are and how you should be working with them. So I wanted to start with a little primer on that. The Department of Revenue, which I will refer to from now on as DOR, is the revenue and tax agency for Indiana. We are responsible for the administration of many different types of taxes here in the state. That being said, you will have business taxes potentially that are not under DOR management. For example, federal taxes will be handled by the IRS. Property taxes are handled by your local government. And state unemployment tax is handled by the Department of Workforce Development. So if you have any questions or concerns about how those work, please make sure you consult with those entities. So what do? Every year, DOR processes millions of tax returns, handles correspondence and phone calls for hundreds of thousands of Hoosiers, completes thousands of audits, and addresses tax protests and legal issues. We also consider ourselves to be very customer service oriented. Our job is not to collect taxes. It is to support taxpayers. We help make sure that you're doing what you need, collecting and remitting the proper taxes in the proper amount. And the more knowledgeable you are about that process, frankly, the easier our job is. So that's why we want to work with you to give you the tools you need to do it right the first time. But enough about us. Let's talk about you and setting up your business. One of the first steps you'll need to take is deciding on your business structure. The business structure you choose will determine the steps you need to take to start your business. Business structures can be divided into two categories: informal entities and formal entities. Informal entities are generally easier to start because they don't require you to register with your business with the Indiana Secretary of State. The trade-off is that owners are personally liable for all debts and liabilities of the business. Conversely, formal entities are required to register their business with the Indiana Secretary of State, and usually those offer more protection to business owners from the entity's debts. There is also typically more documentation required to maintaining a formal entity. I'm going to briefly cover each of the business structures listed here on this slide. Your business structure determines things like your liability exposure, as I just discussed, the amount of taxes you may have to pay, and how much control over the organization you have. One person who conducts a business for profit is a sole proprietor. And this is a very common structure for a lot of small businesses because it's relatively easy to establish. The sole owner assumes complete responsibility for all liabilities and debts of the business. And while you're not required to register with the Secretary of State when you form it, you may still need to register with the Department of Revenue. I'll talk about how to do that in the next section. The income of your business, if you are a sole proprietorship, is reported as part of your personal income. And it's important to keep track of business expenses so that you can accurately report them on your individual income tax return when you file around April of each year. Many sole proprietorships find it useful to keep separate personal and business records, bank accounts, etc. for that reason. A general partnership is very similar to a sole proprietorship. It just has more people involved. It's defined as two or more individuals who co-own a for-profit business. All partners are responsible for the liabilities and debts of the partnership, and income is reported on each partner's personal income. Like a sole proprietorship, general partnerships do not have to register with the Indiana Secretary of State. However, they generally do need to register with DOR. It's recommended that partnerships operate under some sort of written partnership agreement, though there's no legal requirement to do that. Now let's look at some formal entities. The first I want to talk about is a C corporation, which can often just be called a corporation. A C corp is owned by shareholders who are generally protected from the corporation's debts and liabilities because the corporation itself assumes them. The corporation acts as its own separate legal entity, and C corps are subject to what we call double taxation. This means the income of the C corp is taxed twice, once at the corporate income level, and then again when the shareholder and employee level, once wages are paid to employees or dividends are paid to shareholders. S corporations are a little different. All corporations generally start as C corps by filing articles of incorporation with the Secretary of State. Then the corporation can, if they want, obtain S corp status from the IRS if they meet certain criteria. This criteria includes being a domestic corporation, having only one class of stock, and there are also certain requirements about who can and cannot be a shareholder of an S corporation. Here, you'll notice income is taxed only once at the employee or shareholder level. Otherwise, it is very similar to a C corp. It's owned by shareholders, the corporation assumes all liabilities and debts, and shareholders are protected from them. Another common structure is an LLC. This is a formal structure created by filing articles of organization with the Secretary of State. It's owned by members who are protected from the LLC's liabilities and debts. If a business chooses to be structured as an LLC, it's probably because they offer a lot of flexibility. For example, an LLC may elect how it wants to be taxed. If the LLC qualifies under IRS guidelines, it may be taxed only once at the employee or member level, like an S corp, though it can also be taxed like a partnership, a C corporation, etc. Single-member LLCs generally default to being disregarded, and the income and expenses roll up into the single member. That member can be an individual, a corporation, a partnership, a trust, something else like that. Multi-member LLCs default to partnership reporting, but either a single member or multi-member LLC can elect to be taxed as a corporation, as I just talked about earlier, and that corporation can elect S corp status. So overall, there are a lot of options when it comes to LLC. Make sure you know what you are interested in pursuing. All the flexibility in the world doesn't matter if you're not sure what you want out of that flexible option. Those were some of the most common business structures for new and small business owners. However, there are several other structures out there, and we have more information available on our website and in the resources that I'll be sharing later if you want to learn more about them. And if you're not sure which structure is right for you, or you want more information about how to establish your business based on your structure, we recommend enlisting the help of a business expert. Having someone check over your work at the start of your venture can save you a lot of money and effort in the long run. That could be someone like a CPA or a lawyer. You can also try the Indiana Small Business Development Center, the ISBDC, Indiana Small Business Administration, the SBA, or a local SCORE chapter or chamber of commerce in your area. Those can all be great places to find business resources and mentors. Many of them are low cost or completely free. Once you've decided on a structure, now you're ready to register your business at the state and federal levels. You can do these in whatever order works best for you. Different businesses may find it easier to start with state or federal, but for the purpose of this presentation, I'll discuss federal first. When you register your business with the IRS, it will be assigned a Federal Employer Identification Number, or FEIN. Your FEIN identifies your business to the IRS and/or as a unique business. Please make sure you apply for your FEIN with the IRS, not a third-party site. If you Google FEIN registration, you'll see there are .com and .org websites available that will do this for you, and they will charge you an extra fee in order to do it. You're best avoiding those and going directly through the IRS website and doing it yourself. Sole proprietorships with no employees generally aren't required to obtain an FEIN. Certain single-member LLCs also might not need one. Check with the IRS to see if this applies to you. If you're not required to obtain an FEIN, your Social Security or tax identification number may be used in its place. I'll discuss tax ID numbers later as well. Depending on what type of organization you're forming, there may be additional IRS requirements, so make sure to visit the IRS website to learn more about what your business needs. Now let's discuss registering your business with the state. InBiz serves as a single point of contact for those who are registering a business with the state of Indiana, making it one of the simplest ways to get started. With InBiz, you can register your business with the Secretary of State, Indiana Department of Workforce Development, DOOR, and other agencies all in one place. When you register your business with DOOR on InBiz, you're doing three big things simultaneously. One, you're completing an electronic version of the BT1, which is our business tax application. Two, you're registering for whatever specific Indiana business tax types apply to your business. You won't get registered for tax types that you have nothing to do with. And three, you're applying for your Registered Retail Merchant Certificate, which is called your RRMC. On the screen, you can see the most common tax types a new business may need to register for, and they are all on InBiz, along with several others. So, if you sell a product, you will register for sales tax. If you have employees, register for withholding tax. If you sell food or offer lodging in certain areas of the state, you'll register for food and beverage or county innkeeper's tax, respectively. I'll cover each of these tax types more later in the presentation. If you need to register for a tax type that isn't on InBiz, you can do that directly with DOOR, and I'll tell you more about that in a bit. Even if you don't need to register for other tax types in Indiana, you'll probably still need to register for sales tax. That is the big one that impacts most small businesses. That means before you conduct any taxable sales, you should register with DOOR through InBiz for sales tax and obtain an RRMC. If you operate multiple retail locations, you're going to want to get an RRMC for each location. InBiz will walk you through how to do that. Once you register and your application is approved by us, you'll need to file and remit your tax returns on time going forward. If you do that every filing period, your RRMC gets automatically renewed every 2 years for free. One last thing, there are some businesses in Indiana that may not need to register to collect any taxes in Indiana. I mentioned that sales tax is the big one that applies to most businesses, but you'll know I said most. There are some that don't need to. For example, if you were a sole proprietorship with no employees and your business is tailoring clothing or cutting hair, you are providing a service rather than selling a product, which means you wouldn't need to register for sales tax because generally speaking, services are not taxed in Indiana. If you are in that situation, you'll just report the income from your services on your individual income tax return instead of charging, collecting, and remitting sales tax. If you're unsure what tax types you need to apply for, I recommend consulting the business handbook and potentially discussing this with a business expert. When registering your business on InBiz, you'll be asked to select at least one responsible officer for your business. This is a person who will be the primary point of contact between your business and DOOR. The responsible officer can also be held liable for any unremitted tax liabilities. For many small business owners, you're obviously going to be the responsible officer of your own business. But if you have several business partners, you will want to decide which, or potentially all of which, should be named as a responsible officer before registering. And you are able to add additional responsible officers and even remove them later on if anything in your business changes. It is very important to keep this information updated in case anything does change with your business, so we are contacting and sending billing information potentially to the right people. Another important platform to know about is InTime, which is DOOR's official portal for filing, paying, corresponding with us, and much more. There are many things you can do on InTime, including register for a new tax type, change a business location, pay corporate income obligations, view and respond to correspondence from DOOR, get online customer service support through secure messaging, and a lot more. To find more detailed steps on how to set up an InTime account, you can check out the InTime Guide for Business Tax Customers, which can be found at the link on this slide. Most businesses will need to register on InBiz before they can set up an InTime account, so please make sure that you do that. If you do this, do not register your business when signing up for InTime. It is possible to register your business twice, and that can cause some holdups for your business. We advise waiting until you have received confirmation that your InBiz registration has been processed and approved before creating an InTime account. It may take a few days for this to process, but once it does, you'll receive confirmation including important business identification numbers like your tax ID number, sometimes called a TID, that will help you register for your InTime account. Your TID is a unique identifier issued by DOOR. It has a similar use to the FEIN issued by the IRS, but an FEIN is generally for federal taxes and a TID is for state taxes. You may be asked to provide both or just one or the other depending on what form you're filling out or where you are trying to access an account or something like that. So please make sure you know the difference and use the correct one at the correct time. Organizations that don't need to register with the Secretary of State can get registered directly through InTime rather than InBiz. So they can skip a step and just complete all their state tax registration requirements directly on InTime. Be aware, if you do that, InTime is not like InBiz. It will not register your business with any other agency other than DOOR. So if you do this, make sure you understand your business's registration requirements with other agencies, if applicable. All businesses, regardless of whether they register with InBiz first or not, will likely want to set up an InTime account to handle filing and remitting taxes, which I'll discuss more about in a bit. Now, depending on the nature of your business, you may need to file several different types of taxes. So now I'm going to cover information on some of the most common tax types for small businesses. First, it's important to know what tax forms you'll need to file for your business. Depending on what organization structure you choose, the tax documents you're required to fill out will be different. I recommend visiting the link at the top of this slide to see all the current tax forms required for your business. That way, you know what you are going to be expected to file even before it is time to do your first corporate income filing. Here's a general overview of what forms are required for each business type. Beginning with sole proprietorship, you can see they fill out the IT-40, which is the individual income tax return. If you're an Indiana resident, that's what you're filling out around April every year. General partnerships fill out the IT-65 and potentially the IT-40. C Corps fill out the IT-20, and their shareholders and employees fill out the IT-40, and so on. If you need to fill out an IT-40, that can be found in the individual tax forms section of the website when you click on that link. All the other forms on this slide are in the corporate income section. I really recommend reviewing the forms associated with your business before you need to file them for the first time so that you know what you'll be expected to report. And when it's time to file them, you'll have everything you need ready to go. If you engage in retail sales, meaning you sell goods or tangible personal property, or you rent accommodations, you have to register to collect Indiana's 7% sales tax. As I said earlier, services are not taxed in Indiana, with a few exceptions as mandated by state statute that you can learn more about in the handbook. Many taxes will file sales tax returns on a monthly basis. However, if your business collects less than $1,000 in sales tax annually, you'll be considered an annual filer. Later on, I'll show you how to find when you need to file the different tax types that you might deal with. But just know, monthly is the most common for small businesses. Annual is definitely possible, though, if you meet that threshold. And remember, to make retail sales in Indiana, you must be registered to collect Indiana sales tax. And you'll also need to remit collected sales tax back to Indiana. If you don't do that, your RRMC will be revoked, which will mean that you will not legally be able to make retail sales in Indiana. All retail transactions are subject to sales tax unless there's a specific exemption according to state law. Exemptions occur if an item is exempt based on state code or if a customer has an exemption certificate, which I'll talk more about in a little bit. For now, let's focus on the items that are exempt according to state code. This slide lists out some of the most common exemptions, and those include postage, newspapers, lottery tickets, and gift cards. I specifically wanted to give you a little more information about two other things. First, items purchased for resale are not subject to sales tax. Sales tax is collected when tangible personal property is sold to its end user. So for example, if the owner of a store purchases a case of windshield wiper fluid to resell in their convenience store, that owner is not required to pay sales tax when they purchase that item. The tax is going to be collected when they eventually sell it in their convenience store to the end user. To purchase items for resale exempt from sales tax, they will need to complete exemption certificate form ST-105 and provide it to the distributor. I'll tell you more about that in a bit. Sales of food can be complicated. Some foods are subject to sales tax, others are exempt. In general, any food that's meant to be consumed on the premises or immediately after is subject to sales tax. That includes all foods sold by a restaurant, even if it's for carryout. But food and food ingredients exempt from sales tax include things like food that is sold in an unheated state, by weight or volume as single items that are not sold with utensils. Some examples of that would be a package of potato chips, a whole piece of fruit, a can of soup, a lot of things that you might commonly find in a grocery store. If you sell food and you need to know when it is exempt and when it is not, I'm going to give you a good resource to help with that in a few slides. In addition to all of that, certain people or groups are exempt from sales tax when they buy from a business, and those groups must give the seller an exemption certificate. Usually that is Form ST-105. That's a multi-use form that can be used by most exempt purchasers. If a customer gives you a valid completed exemption certificate, where the name on the certificate is the same as the one on the invoice, and it looks like they've filled everything out, that means you are in the clear. You do not need to collect or remit sales tax for that purchase, and in fact, you should not. What you should do is keep a copy of that exemption certificate for your records to prove that it was a valid exempt sale. Tax-exempt groups that might use these forms include things like federal government agencies, Indiana state and local government agencies, transportation providers, certain manufacturers, etc. Also note, while this is the most common exemption certificate, it's not the only one you might get. If you sell vehicles, there are several exemption certificates for different types of vehicles, for example. And also, nonprofit entities, when purchasing for their exempt nonprofit's purpose, use Form NP1. If you have employees working for you, you'll need to collect income withholding taxes. These are state and county taxes withheld from your employees' wages in trust and then submitted to DOR. Withholding agents are employers who are required by the IRS and the state to withhold income tax on salaries, wages, tips, fees, bonuses, and commissions. Generally, employers need to withhold both Indiana state tax and county income tax from employees' wages. Withholding of county income tax is required in all 92 Indiana counties, and the county tax rate will depend on where the employee resided as of January 1st of each year. Departmental Notice Number 1 is a really good resource. It details the income tax withholding rates for all Indiana counties and even explains how to withhold taxes. So I recommend checking it out if you are going to be employing people. It's also worth noting that if you are a business who hires independent contractors, you most likely will not collect or remit any kind of withholding tax for those individuals. Independent contractors have to file their own self-employment tax instead. The IRS website is a really useful resource for learning more about independent contractors. So if you're not sure what types of people you will be hiring, please consult the IRS website to learn more. Your average tax that you withhold each month determines your filing frequency. So if your monthly average tax that you're withholding is about $83 or less, you file annually. If it's more than that, you file monthly. If it's significantly more than that, you file early monthly, which means you file on the 20th instead of the 30th each month. There are also a few different withholding forms you'll need to be aware of. One of the most important ones is the WH-4. The WH-4 is the form that employers give to their employees and have them fill out when they start employment, and it lists the number of exemptions that they're claiming for their county of residence, which is really important for employers to know because you need to apply the correct county tax rate to your employees' wages. If you don't get that right, you might not be withholding the correct amount throughout the year. And when your employee files their taxes, they won't be happy if they end up owing because of that error. Sometimes your employees may move and therefore need to have their WH-4 updated because if they move to a new county, that is a new county tax rate to consider. Businesses will also need to file Form WH1, either monthly or annually, as I discussed just a bit ago. Then in January of each year, the business is also going to file Form WH3. This is the annual reconciliation form that includes employee wage statements like W-2s and 1099s. If you don't file the WH3, you'll be subject to a penalty, and or may need to contact your employees to verify their withholding accounts. In addition to state sales tax, some counties and municipalities require businesses that sell food and beverages to register for, collect, and remit food and beverage tax. Food and beverage tax rates vary by county or municipality. Businesses that operate in multiple locations in different counties and municipalities will need to register and file food and beverage tax for each individual location. This also applies to caterers and food trucks. Food truck owners and caterers have to file food and beverage tax for each county and municipality that they conduct business in. And you typically need to indicate that you are a caterer on InBiz and InTime in order to do this. Taxable transactions when it comes to food and beverage tax include food that is sold and served by caterers, food cooked on the premises and sold at a deli counter, and any transaction where the seller provides utensils like plates, forks, glasses, cups, napkins, straws, and so on. As you've probably gotten the impression, food sales can be very difficult for a new business owner to navigate. So I offered here a few resources that can help to provide more information on how both sales tax and food and beverage tax could apply to your business. The first link is to our Food and Beverage Tax Business Guide. This document has an overview of how the tax works in Indiana, including the areas where it exists, what their rates are, how to collect and remit it, and the general rules. The second is an information bulletin that's specifically about sales of food. This is a fantastic resource to help you navigate when your business needs to collect sales tax or food and beverage tax on various food items versus when you sell and it is exempt instead. Please consult that document if you have any questions. It is pretty comprehensive. And the last link is to an interactive map that can help you determine if your business is going to be subject to food and beverage tax. Use that to plug in your business's address, or if you are a caterer or food truck, where you will be doing your business. And you can use that to see which municipality, township, and county you are officially doing business in. That'll help you determine the food and beverage rates that apply to you, if any. Now, some counties require a tax on the rental of rooms and accommodations for periods of less than 30 days. This is considered the county innkeeper's tax. Accommodations can include things like rooms in hotels, motels, B&Bs, even apartments or houses or vacation homes. Also, gymnasiums, coliseums, banquet halls, any other places regularly offered for rent, and even things like cabins or fixed trailers, spaces in camper trailer parks. Now, county innkeeper's tax does not apply if you're renting for 30 days or more. Some counties have a minimum room threshold. Also, keep in mind, if you rent in multiple different counties, you'll need to be registered for and collect county innkeeper's tax in each county. General Tax Information Bulletin number 204 has more information on this tax, as well as links to other resources, including the rates for each county. Those were some of the most common types of taxes, but you and your business may need to collect and remit a variety of other taxes based on how you operate. We've listed a few of those tax types here, and all of these are available in our tax handbook for new and small business owners. So read through this description, and if any of them sound potentially applicable to you, you can go to the handbook and you can read more about what exactly that tax is, what the rates are, how to get registered, how to collect and remit it, etc. If you review the name of a tax type and you think it doesn't have anything to do with your business, there is a really good chance it doesn't. The names are fairly self-descriptive. Now that we've given you an overview of some of Indiana's business taxes, let's discuss how to file and pay them. As mentioned earlier in the presentation, the amount you owe can determine how often and when you file certain taxes, like sales and withholding. The link on this slide provides a list of due dates for different tax types throughout the year, which you can use to determine when you need to file the specific tax types that apply to your business. Be aware, if the average amount of tax you remit increases or decreases, that can change whether you are a monthly or annual filer. So if that happens, DOR will inform you of that by sending you a letter at the end of the year so you can adjust for the upcoming year. It's also good to routinely check InTime for communication from DOR for this and many other reasons. Be aware, businesses are required to report and pay taxes every filing period. Seasonal or temporarily closed businesses may have periods where they don't collect any tax revenue. Some businesses just starting out also will register before they start making sales. And for any businesses in those situations where they have periods where no sales, withholding, or any other tax was collected, but the business was still registered with us, the business needs to file what's called a $0 return. So they can just log into their InTime account, go to the filing section where they typically would report the sales tax that they owe, and instead of putting amounts, they'll put 0. This is to help ensure that you don't receive an estimated bill from DOR. So please make sure if you're ever in that situation, you are filing even if you have nothing that you owe. Now, to remit sales, withholding, and several other tax types in Indiana, you have to do that electronically. That is why we have InTime. It is one of the best ways to file and remit most business taxes, including your annual corporate income taxes, your monthly or annual sales withholding taxes, and many others. As you can see here on this screen, these are all of the tax types currently available on InTime. The ones that are bolded are the ones most likely to apply to small business owners. You can also make individual income payments and estimated payments on InTime. It's a really useful resource. Now, there are some tax types not currently available to file or pay through InTime. For those taxes, you will need to download the appropriate tax form from our website, print it out, and mail it in to us. You can also use non-DOR approved platforms to file and pay. For example, third-party vendors such as ADP or QuickBooks are valid electronic filing and payment methods. You could also hire a tax professional to manage your tax obligations if you would like. Tax professionals can be a very good resource for small business owners because they can provide expertise and personalized guidance as you start and grow your business. DOR has a resource page on how to find a tax preparer, so you are welcome to consult that if you would like to investigate it more. If you want to authorize someone like a tax professional to represent you and file and remit taxes on your behalf, you need to give them power of attorney. You can do this either by filing Form POA1, which can be found on our website, or completing an EPOA on InTime. And this just gives that person power of attorney over your tax accounts. It's not medical power of attorney, for example, just power of attorney with DOR. All right, before we wrap up, let's talk about a few resources that are available to help you as you form your business. The new and Small Business Education Center is a great starting point and a good way to find additional resources. The tax library also has several guidance documents, a few of them I mentioned earlier, called information bulletins and departmental notices. We've mentioned a few already, but there are dozens of them on a variety of topics, and these are a really good way to get more in-depth information about topics relevant to your specific business. So consider reading over what we have available and opening up and reading any that have topics that apply to you so you can learn more. The business tax page is also another good place to find resources on our website. It links to county tax rates, forms, FAQs, and more. And finally, the handbook linked here is meant to be a companion to this presentation. If you want more information about anything we covered today, check that out. If you would like to be contacted when we update relevant information bulletins, pages on our website, and so on, you can do that by signing up for email updates. There are several categories you can sign up to get updates on, but I would especially recommend the Tax Bulletin, which is our monthly newsletter for businesses and practitioners. To sign up for updates, you're going to go to the Contact Us page of our website, find the box that says Sign Up for Door Agency Announcements, click on that, enter your email address, and then select whatever topics you want to be updated on. If you have questions about anything at the federal level, remember, the IRS website is your best bet. And the first link on this page is a great place to find additional resources for new businesses directly from the IRS. Also, remember, our presentation today was focused on Indiana. If you want to learn how state taxes work in other states, I recommend you check out the IRS link provided here, which has pages for each state, including links to that state's revenue agency and some other helpful links for people doing business there. There are also many ways to contact us. I provided the business tax phone line here. If you have an InTime account, you can send a secure message to us through InTime. It's one of the easiest ways to ask us questions. Also, we have district offices located across the state, and you are welcome to make an appointment to visit us at any of them if you want to talk through something in person. Finally, if you have a complicated issue that our general customer service team can't help you resolve, particularly if you're dealing with financial hardship issues, please consider contacting our Taxpayer Advocate Office. The link on this slide takes you to their page on our website where you can learn more about them. They are a great resource and they are happy to help you if you ever need them. So, thank you for your time and attentiveness. We are happy to work with aspiring entrepreneurs and small business owners like you to make sure you're informed and compliant with Indiana's tax requirements. Remember, the second part of our two-part series on small business taxes is also available for anyone who's further along in the business formation process or just wants to learn more about online sales, compliance, record keeping, and several of the other topics we address in that presentation. I hope to see you there. And either way, best of luck with your business venture. Thanks.